Morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's December 23rd, and we got a lot to go over today, so we're going to jump right into it. Tomorrow, we just got the weekly jobless claim, so pretty quiet day tomorrow, especially if people probably light trading as we approach Christmas. And Friday, of course, will be Christmas, so markets will be closed. So, anyways, just jump right into it here. Today, we got the personal income for the month of November. So we had back in October a 0.4% increase, and the forecast was supposed to be at 0.2, and it actually was a little bit better. So of course, we love seeing people make more money. Consumer spending came in at forecast, which is good. After October, it was kind of slow at 0.1%. Forecast was at 0.3, and it came in at forecast. Core inflation, that is the personal consumption expenditure, the PCE index, and this is when you strip out food and energy. So we had 0% back in October, and forecast for November came in expectations at 0.1%. So that leaves us year over year at 1.3 still. Basically maintained the 1.3%, where the Fed's target rate is at 2%. So we're still a little bit low on there, but the Fed does think it's going to increase over time here. Durable goods orders for the month of November. We had basically better than expectations, even though the expectations weren't too good. We had a 2.9% growth of durable goods orders in the month of October. November was supposed to have a negative 1.1, and actually would have been negative 1.5% if it weren't for some last moment orders from the government. I guess the government placed in some big orders, and it basically came in at flat. So better than making negative. Consumer sentiment, people are feeling better about where things are at in the month of December, so that's our final reading for December. So the previous reading was 91.8, and it was supposed to go up with a slight tick to 92, and it came in at 92.6. New home sales is way off, as you can see here. We did improve, however, but not as much as what the forecast was. We had 470,000 new home sales for a year. For the month of October, and it was supposed to jump up to about 505 in November, and only went up to 490,000. So nice to see an improvement, but still a little shy from where we are. And of course, it was a negative territory for basically the Midwest and East Coast, as we are in winter seasons there, and the West and the South were still up. So that's where we got more of the improved numbers from those areas. Stock market's up today. It's taking its cue again from the oil. It did like the data that we did have today, so we had some pretty good overall data. But also the price of oil went up a little bit more, so that kind of helped ease concerns a bit. So as a result, the stock market's up a little bit more again today. On the other hand, as you can see with the red, that means the bond market's going down, so that translates to a little bit higher prices in interest rates. So we had a price adjustment, as you can see, that longer red line box there, this candle here, longer one. That means we had a price adjustment yesterday, meaning that pricing got worse as the day went on, and then today we start off even lower. Right now we're about 9 basis points lower than where we were, but we were as much as 16 basis points, would translate to basically worse pricing again. So further pricing. We are towards the bottom here. We have maybe a few. We could probably eventually touch like this line here, this resistance line, but that would be the low point. We could bounce up. We may get that tomorrow, as a lot of people typically like to put a lot of their stuff into the if there's any volatility for safety, flight to safety. So we may get a flight to safety call tomorrow, so we may get a little bit of improvement tomorrow. But today it looks like we could potentially touch off the lows we've been seeing. So as you can see, we've had some lows here. We've been kind of touching off roughly in this line area, so over the past 2 weeks here. All right, you guys have a wonderful day. Enjoy yourselves, and we'll see you guys tomorrow. Thanks so much for watching. Take care.